the investors that know this market really well acted in the first 3 months of this year. We saw the platinum ETFs globally go up by 690,000 ounces in 3 months. It's the biggest quarterly increase since they were launched in 2007.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics, and we are with Trevor Raymond of the World Platinum Investment Council. Trevor, great to see you again this year. We were talking platinum a little bit last year, perhaps even more so with Brendan, but certainly a lot going on. We've seen palladium quite volatile, and I think there's a lot of interest in platinum, although not as much information out there, so perhaps you could give us a little breakdown of what you're seeing and looking at.
Chris, great, thanks. Good to be back. And yes, we did speak a year ago, and a lot's changed in a year. You're right, the two big points. Platinum is not well known. It's something that is my day job to make sure people get to know about it. I think there's probably about 4 drivers going on. As you mentioned, the palladium price has gone up significantly. And what most people don't know is that platinum and palladium can be substituted in a gasoline engine at a 1-to-1 basis. So there's no reason why platinum and palladium shouldn't be trading at the same price.
Right.
The last time platinum was at $1,700 an ounce, none of its uses went away. So we believe that platinum and palladium will probably trade at the same price as more platinum is used in gasoline vehicles. China and the US pretty much only make gasoline vehicles, so it's quite an appeal. Palladium's been in deficit now for 8 years. So from that point of view, one of the biggest demand drivers over the next while will be platinum going into gasoline.
Right. One thing we hear a lot about, differing views on how interchangeable they are. So if a manufacturer switches, how much of a crossover is that? I know you don't want to be going back and forth, but how involved is that to switch from one to the other?
Okay, so the formulations of platinum, palladium and rhodium on a car are proprietary, they are confidential, and most of the fabricators are unable to speak about it. So you tend not to get the detail. The narrative that's most common, unfortunately, is that people are saying it's very costly to take a car that's got a palladium catalyst, take it off the road and replace it. You would never do that. Where the substitution would occur is that a new car about to come out in a year or 2, you would switch that formulation while you're developing the car. There's no retooling costs, the surface chemistry's been around a while. In fact, in the year 2000, palladium went to $1,000 an ounce, and over the years, 3 or 4 years thereafter, 1 million ounces of platinum went back into gasoline. So it's happened before, it should happen now, and the magnitude is really important. There's 8 million ounces of palladium that go into cars every year, and only 3 million ounces of platinum. So if you do get substitution, it's not a huge amount gone from palladium, but it's a big deal for platinum.
And if you do have the substitution, since you're doing it at the manufacturing level, it seems like a decision that not taken lightly, but once they do change, you have it in place for a while.
It can change quite quickly, and that's the problem. There's no, it's not captured in the data, we're not seeing it. It'll be known over the next 18 months. And what we think is that the investors that know this market really well acted in the first 3 months of this year. We saw the platinum ETFs globally go up by 690,000 ounces in 3 months. It's the biggest quarterly increase since they were launched in 2007. But those are the most knowledgeable, and it's an opportunity for the retail investor to get in right now.
Right. So have we started seeing that shift begin yet? Because palladium, obviously, as you mentioned, I think it was down quite a bit today, it looked like this morning.
Come up a little.
Although platinum in the $800 per ounce range, palladium almost double that. Have manufacturers started making that switch yet, or are we still early there?
So because of my background and I worked closely with Johnson Matthey for many years, I believe they've made it, but no one's admitting it.
Right.
So at the moment it's just an opportunity. I think the other driver is about diesel cars. You know that we had Dieselgate in the US. The VW got caught cheating. It affected 500,000 cars. And the sentiment towards diesel has been incredibly bad.
Right.
In Europe, the number of diesel cars on the road dropped from 50% down to as low as 30%, and the demand was lost. What's happening right now is that from September this year, every car sold in Europe has to be tested on the road. And that's changed the game. So finally the automakers can say our diesel cars are clean. And by being able to do that, they can promote the diesel car, which emits a lot less CO2. So we think the CO2 fines that are due in Europe gives a reason for the automakers to want to have all diesel cars on the road, and that's really good for platinum.
Yeah, and perhaps one of the challenges with platinum, although good for the price, is that a lot of it mined in South Africa, not really politically the easiest place I hear to do things. You have a lot going on with the government there. What can you say about the supply side?
So usually your concern about jurisdiction is important, being at the Sprott Resources Conference. People mine resources around the world and jurisdiction is an issue. I think that the value of platinum to an economy, it's just too valuable to let it go. There's about 170,000 people in South Africa that go underground every day and mine platinum. Zimbabwe's had a pretty tough political environment for a very long time, and there's still platinum coming out of Zimbabwe. Not to say that you need a bad political environment. So I think South Africa is a good, stable supply. The other thing is that most automakers do have 3-year forward purchasing to make sure that they're not vulnerable. But I suppose the best part is that jewelry uses at least 2 million ounces of platinum a year, and jewelry is price elastic. So the industrial users got the comfort is if there was to be some regional disruption, and in fairness, 80% of platinum comes from Southern Africa, that the jewelry would give up price as the price rose, and that's instantly available to make cars, to make gauze, to make fertilizer. So the industrial user of platinum is comforted by the price elasticity, and they've never seen it this cheap for a very long time.
Yeah, I've been digging into it quite a bit. Obviously, as we've discussed before, I have my silver addiction, although every once in a while I take a break, and a lot of similarities, especially because platinum may be very similar to silver, even more so than gold, because it has that industrial component, and again, you have the advantage of something you can't print. Along those lines, you're the same thing about palladium to a degree of a structural deficit. Perhaps you could give us a rough breakdown, just put some numbers on the supply and demand. To put in context, is there a deficit, or are we headed towards something where one day there's a scramble for the actual physical metal?
Sure, so interesting point that you make, and I think platinum is a precious metal, but it does do a lot of good industrial things. Palladium, specifically, a lot of palladium, I think just over 80% goes into cars only, so it's very dominated by one use, and that's why that price is run and there's a shortage. If you look at the platinum market, our latest published estimate estimated about a 375,000 ounce surplus on an 8 million ounce market.
Okay.
Johnson Matthey, who's the largest fabricator that turns platinum into industrial goods, they've estimated that the market in platinum's already gone into deficit of about 100,000 ounces. So I think we've got a market that's pretty close to balance, with the potential for 3 very big demand growth. One, we spoke about diesel. Fuel cell in heavy-duty trucks is interesting in the short term,
right,
and then diesel cars on the road. So you've got this potential for demand growth. Supply is constrained in South Africa. Their margins are really tight. So what you're looking at is that you've got a situation where the surplus in platinum has gone away almost quickly. Palladium's, as I said, been in deficit for 8 years. So that sort of gives you, and I think your point that you make about silver is valid. The diehards at this conference that love gold would rather suggest that, well, platinum isn't that precious because it's got this industrial dilution. And some people suggest the same thing about silver. Silver isn't quite pure precious because it's got an industrial use. Hey, I think the way I see it is it's got a precious underpin and an industrial upside. A lot of silver's going into photovoltaic. And the overlap is that the silver photovoltaic means you can generate hydrogen from solar panels, and you can store that electricity as hydrogen. At the moment, you just have to switch solar panels off if you've got too much peak electricity. So I think wind power and solar power and the combination of hydrogen, platinum being able to store it, and then vehicles using the hydrogen, I think all these 3 have got quite a lot of legs over the next while.
Yeah, it's a great point you make, because I think often how, yes, I believe very strongly in gold, but a lot of the gold is still out there somewhere, whereas to me, what shifted me over to silver and then really got me more interested in platinum is a lot of it's being used. And is this similar that it's not really recoverable, or I guess people strip out the catalytic converters in the junkyard and I hear that's the first thing they go for, but is any of that recycled, or is some of the platinum consumed and we don't really get it back at these prices?
So the interesting thing where platinum's got the edge over silver is that the cost of recovering silver, sometimes the silver does get thrown away.
Right.
Platinum not so much. So you've got an 8 million ounce market, 6 million ounces are coming from mining, but 2 million ounces a year come from recycling, mainly from auto catalysts at the end of their life. And if you take an autocatalyst of a car, break it up, mill the ceramic, you're pretty much recovering 95% of what's in that catalyst. So that's a mature industry. We have evidence of catalysts coming off cars in Europe, changing hands in the US and being put into a smelter in South Africa. So it's a very efficient chain. And the other thing is that that's a thin margin, but the input cost is the price of the metals.
Right.
So it's a very sophisticated recovery and very important to ongoing supply. The interesting thing is that I took some people from the US Department of Energy underground in South Africa about 15 years ago, because they were worried about switching Middle East oil risk for South African platinum risk if they all went fuel cell vehicles in the US.
Right.
And they came away saying that the more fuel cell vehicles on the road, the higher the recycle load and the less the reliance on primary. So the more fuel cell vehicles that are on the road, and that would be a closed loop recycle.
Right.
So Toyota in that Mirai that's on the poster behind us, they would be responsible for taking that fuel cell stack out and replacing it. The nice thing is that the heavy duty fuel cell, you just can't build a battery truck, big enough battery that takes the payload of the truck away, whereas the fuel cell gives you 1,200 mile range. Really exciting stuff.